Had a nice little trade this afternoon on KALY, first green day, OTC, former runner. I had a chance to also buy EDAP, and also EDXC was a first green day, but it wasn't as strong. EDAP was the strongest of the three, but it doesn't have as good of a history. So when looking to buy into the market close, can you see my screen? I don't even know how this works. When looking to buy into the market close, you're looking for past performance. You're looking for ideally a big percent gain, and big volume and a catalyst. You have the catalyst. EDAP had good news. KALY had good news. So when in doubt, I just go with the better former runner and the OTC. Most people try to stay away from OTCs. I don't. I think that they're easier to trade, especially overnight. Sam says, first day into the challenge, excited for the first live session. Thank you, Sam. I get this a lot. I like that you guys are, excited, but, again, like if you truly want to have the right mindset with this is a marathon, not a sprint. I guess it's human nature, when you're taking on a new subject, it's exciting. But so many of you guys are like, oh, I'm so excited for my first trade. I'm so excited for my first day. Your first trade and your first day and your first week and your first month, it's all irrelevant in the grand scheme of things. You need to have the proper perspective that this is a marathon. I know you're excited, but you won't be excited in a year after how much homework I give you and how much studying you have to do. So this is not something that's just going to change your life overnight. It changes your life over several years if you take it the right way and you study. Maria says, do I ever get caught in a 50% gap down? No, but I have gotten stuck in some gap downs before, not 50% though. And all you can do is cut your losses. How long do I keep a ticker on my watch list? As long as it deserves to be there. Sometimes I miss some plays. OOIL, pissed me off that I missed this morning. It was such a good morning panic down to 210. It closed at 278. So you had roughly 70 cents of upside to make. I saw Jackaroo. Congrats to him. He nailed it. Serious question. I'm on the second DVD. Just wondering how much the info. Everything. Study everything. God, some of you guys are like, I don't want to watch something that's a few years old. Yes, you should. History matters. I know you might not think so, but these patterns repeat. Like some of Tim Grittani's patterns in trading tickers aren't currently working right now. Does that mean you can just skip those chapters? No. Learn your history because they can come back. And what if they come back and then you're unprepared because you didn't study history? So many lazy people make so many excuses because they want the quicker way to get rich and get knowledgeable. You cannot cheat success. I can't tell you how many newbies say, oh, Tim, you have too many videos, you have too many DVDs, you have too many webinars. You should be grateful that we have so much stuff, that you have the opportunity to condense 20 years of learning. You have to be a total idiot not to get everything that I teach inside of 1, 2, 3 years max. I've condensed the learning by 85, 90%. And yet, lazy people still look for ways not to study the past. Pathetic. Charles says, what causes micro flushes up and down, the split second ones? The micro flushes up and down, I mean, that's just part of volatility. And sometimes there's bad prints too. For me, I care more about the trend that the bid and the ask has rather than, a random traded price at whatever price. There's a lot of bad ticks, bad prints with these penny stocks. The data still isn't perfect. For me, I want to see a nice uptrend in the bid and the ask rather than whatever the price is. Usually the price trades between the bid and the ask, but every now and then there's an outlier. How can you tell what are the signs that shares are being short sold? When a stock is up a lot, there's so many chat rooms and newbies who just short anything that's up a lot. They ignore my rules. They reason that most penny stocks fail in the long run, so let's just short anything that's up. And there's a whole bunch of newbies who think that they know everything. And they are, frankly, I'm very grateful for their stupidity and naivete because they're creating this kind of like suction cup of short sellers who just short anything that's up. And they are the ones who are creating these mammoth squeezes. So I don't think it pays to be a short seller right now. The people who are shorting are either very veteran and very experienced, so they have big accounts and they kind of laugh at the short squeezes that are being created, or they're newbies and they think they know everything and they don't respect history, or they're trading elders and they're going to blow up, and anybody who follows them will blow up too. But earnings winners, I got to tell you, they haven't really been performing that well lately. You had to play SORL, which I thought was an earnings winner, and it didn't really do much. So you kind of have to know which strategies are working right now and which ones aren't. The best one that's working right now are the morning dip buys into the panic on the first crack, like OOIL today, where it had a 30% bounce. It doesn't get easier than that. I wish that OOIL was more liquid, though. I think Jackaroo said he bought like 2,000 shares at 210-ish. I don't know what he sold out at, but if you get 2,000 shares, you can make 40, 50 cents. That's not bad to make $1,000. That's the kind of trade that was available. Rajan says, how do I toggle between 12 to 15 watch lists by different buckets? I have like 30 stocks on my watch list, and then I, toggle it down to the top like 10, and then you can toggle it down to the top 5 based on how good the pattern is. You can weed out stocks like a First Green Day on a play like APRN. I can weed out because it doesn't have a great history of multi-day spikes. It doesn't have a great history of earnings win continuations. I could be wrong, but just based on that initial setup, it's not high on my bucket list. Let's see. Tim, I watched one of your old videos. Who was a promoter? And he said there are 2 opportunities. Question, what do you think of buying early pumps? Promoters aren't effective right now, so I don't buy early in the pumps. What current day trader do you admire the most? I don't admire any day traders. I don't think that day trading should be a job. I admire retired traders who come out of retirement to trade the best setups. Ricardo says, when looking a few minutes before the market open on a big percent gainer, do I look at the spread narrows? No. I look at the catalyst. I look at the past performance. I look at the volume. I look at the float. I look at the market environment. Everything that I go over in my trader checklist guide, I still look at. I don't make guides and then just say, hey, I'm going to teach people, 7 indicators, and then I'm going to ignore them. Please watch my trader checklist guide. Jake says, if you're there at the market open, will you most likely give it a minute or 2 to spike? If it doesn't do that, will you sell? Jake, you can't have these generalized rules. What's the catalyst? What's the float? What's the market environment? What's the pattern? I'm not just going to give a stock a minute or 2 every time. Tomorrow, I don't even know if I'm going to have Wi-Fi. So I'll see how good the Wi-Fi is. But that's going to be the main indicator as to how much time I give on my remaining position on KALY. Jeff says, sizing in on trades, depending on your risk, how should you size in on a breakout? Again, so many people bring up 1 or 2 indicators. What do I do on a breakout? What do I do on a First Green Day? What's the float? What's the past performance? What's the overall market? What's the sector? What's the volume? What's the catalyst? Like, you have to look at all of this stuff. You can't just say, let me do this on a breakout. This is not cavemen. I know there's people where you think you can just buy and sell based on 1 indicator, but you're not going to do well. Isaiah says, I was accepted last week. First webinar, no questions yet that can't be answered in your archive videos. Thank you. You'll see that a lot of these webinars, I get asked questions by students who are not studying the video lessons, who are not studying the DVDs, who are not studying the webinars. I'm happy to answer it, but I'm also going to remind you that you can do this on your own time. In an ideal world, you study the archived video lessons, DVDs, and webinars. Then you come to me with these Q&A webinars with questions that you got from watching the archives. That way, you can advance your education rather than me just repeating the basics over and over again. But I need you to take notes. I need you to be meticulous, and that is helping you, which helps me help you. Kieran says, if your work interferes with your availability to the stock market and you had to choose between being available at the open or close, which time is better? Totally depends on you. Some people like holding stocks into the close like I do, buying first green day. Some people don't like holding overnight and they just like morning dip buys. You have to choose what works best for you. This is not an exact science. This is the rules and the patterns that I can teach you and how you can adapt that to your own personality, your own schedule. Toasty Snow says, I learn more from my losses than wins. If you look at one of my blog posts where I talk about, I say like why I check myself into prison. If you look at this blog post, it's called Why I Check Myself into Prison. And it's all about when you're under the PDT rule, it's kind of like being in prison. You can't break out. You're not free to do whatever you want. It's good. It's good to penalize yourself. It's good to force you to trade less than you want to. Overtrading is the number one problem. If you are forced to really be considerate about every single trade you make, you're more meticulous, you're more well prepared because you take each trade more seriously. Every trade has value because it's such a great opportunity because you're like, oh, I only have this one opportunity, I better make it count. Versus if you're just out in the wild, you can trade whenever you want, you don't take each trade as seriously, you're probably going to prepare less, you'll probably lose. That's what it comes down to. I would rather you be in prison and miss out on tons of good trades so that you are so determined to get out of prison. But to earn your way out of prison, this is why I check myself into prison every year with a $12,000 account. And my $12,000 account is still under the PDT rule. It's up to like $18,800. But if you can make 50% on your money every 3 or 4 months, that's pretty damn good. Jacob says, I developed bad habits, making money, holding, and hoping during the cannabis CBD bull run. The strategy has recently killed my gains, morale temporarily. At least you've learned. A lot of traders develop bad habits even while they're profiting, and their profits mask their bad habits. But eventually it catches up to you. Tim Grittani had a lot of bad habits, even when he was up $200,000 or $300,000. He was going in too big, scalping too much, not really focusing on the best patterns. And guess what? He almost lost a lot of money. He didn't lose like half, but I think when he was up like 500,000 or 600,000, he lost like 100,000. And when he was up like $1 million or $2 million, I don't remember exactly when in his career, but he lost like 100,000 or 200,000 on Lake, and he went way too big too early. And he was doing the same exact stuff that had made him his money, but you can make money in a bad way. In a hot market, it looks very easy. But then when the market cools down, if you keep up with the bad habits, you get crushed. So this is the problem with a lot of these newbie short sellers, right? The pattern has been working. They say, Tim, he's a dinosaur. He trades too carefully, too cautiously. And so they think that their bad habits are going to make them a lot of money. And in a hot market for short selling, not necessarily a hot bull market, but a good market for short selling, they do make a lot of money. Then when the market changes, they blow the fuck up. So the reason why I can talk like this, not because I'm arrogant, it's because I'm experienced. I've seen hot markets, I've seen sad markets, I've seen bad markets, I've seen all kinds of markets in 20 plus years. There's very few penny stock traders who have as much experience as I do. So I know when a newbie thinks that they know more than they do. And it's not a question if they're going to blow up, it's a question of when. It's not that they're bad people, they just don't know what they don't know. They're newbies. Tim, the adapting dinosaur. And maybe I am a dinosaur, but again, I would rather teach you safe, conservative rules than a lot of these gunslinger rules. I can't tell you how many chat rooms where they're like, Sykes is such old news. He made most of his money during the tech bubble. Actually, my biggest year was 2014, not quite the tech bubble. So they're wrong in the first place, but then they take these gunslinger type positions, they lose almost all their money, 50, 75, 100% of their money. They get very introspective on Twitter when they should have just followed my damn conservative strategy in the first place. But again, newbies are stubborn, extra stubborn, and newbie short sellers are the most stubborn. Thank you very much. How do I end this? Hey, Tim Sykes, Millionaire Mentor and Trader. Thank you for watching my videos. I hope that they help you. I want to share everything that I've learned over the years. You can check out more videos right over there. And also click subscribe so that you can watch all of these videos, get that knowledge, and become my next millionaire student.